Morning, ladies and gentlemen. I'm Paul Reynolds, and if you don't know who I am, I'm the production accountant for Gemstar. I'm truly excited this morning to talk to you about Gemstar's production's financial performance over the last month. I will ensure to be concise and brief and to the point because I know and I'm aware that you all are busy. Here's our agenda. Okay, our current financial climate. We will first start off with the balance sheet. Balance sheet standard. As of November the 17th, reveals that our total checking and savings is currently at over $50,000. And I'm not giving you specific numbers because you can read for yourself. I don't want to insult your intelligence, but it's highlighted here. We got actually 50,700, and everything will be calculated to a T. But I'm gonna say, hey, over this amount, over that amount. All right, continuing on. This along with the $500 listed in the deposit at the vendor, $2,000 supplies inventory. And we have a little depreciation on our vehicles account, where we're at $13,953.12. Okay, so that's why I didn't want to give you precise numbers because I don't want to get caught up in that. But I did it in this case. As far as our liabilities and the equity portion of the balance sheet, we're looking at a little over $1,400 listed in our current liabilities. And as far as our long-term liabilities, we're at about $40,000 in loans payable. Now this is we have to pay this over time. This isn't anything that we have to worry about. This is actually an asset as of now, and this is going to help us actually be able to make deposits at the vendors and actually handle any kind of income and expenses that we may encounter. This coupled with the $20,000 in our common stock, and we have a little over $5,000. We're balanced out on both sides at $67,000 with $67,153.12. Okay, you see it? You see it at the total fixed assets, and then we have it at the total equity. All right. And continuing on, our profit and loss budget versus actual. Essentially, we're over budget the majority of our expenses. However, of note, we didn't encounter any overages in the office and supplies expenses, nor the professional fees. The way we spent this month is likely due to the holidays. So it's nothing to worry about, nothing to concern. We're still waiting some numbers from our representatives, our sales representatives, our event representatives, okay? So once we get those numbers in, we'll be able to tell you, hey, whether we got an increase in revenues or not, as we haven't completed this month yet, okay? Continuing on to our statement of cash flows, we're in a positive in our operating activities as we earned $5,733.12. However, we of course encountered expenses within this realm as we spend money to make money, correct? Additionally, with our financing activities, at $40,000 in our loans payable and $20,000 in our common stock. And as you can see, I highlighted this as well as I highlighted here in the statement of cash flows as well as in our balance sheet. I talked to you about it in our balance sheet as well. I just want to make sure that you guys are seeing this over and over again so you have some kind of perspective or overview on where the money's going and how it's being spent. All right. Continuing on, we're going over our internal controls. These are internal controls that I created in order to kind of facilitate and ensure that we don't have any interactions or activities that happen with the last guy, like what happened with the last guy. Okay, it's quick. Okay, this is our internal controls. The first internal control is approval authority. All right, and as far as approval authority, it requires a key or specific personnel to authorize certain types of transactions. This can be a layer of responsibility or security. So essentially, this keeps any individual from making any fraudulent transactions. For example, I'll be the approval authority for large purchases, or say I'm going to have you, sir, the CEO, to be the approval of large transactions because I want to make sure that we have that oversight. Authorization, going on authorization. All transactions and activities should be carried out and approved by employees acting in their range and knowledge and proper span of control. We have to maintain this, okay? I've identified key individuals and I will conduct spot checks to ensure that nobody without authorization has access to certain information and activities. Documentation. This in context is in the internal controls, paper, or electronic communications, which supports the completion of the life cycle of the transaction, meets the criteria of documentation. I'll make sure everything is properly documented. We gotta make sure we properly document everything from here on out, because this is how we keep the auditors off our back. This is how we keep our CPAs off our back. Okay, physical security. This is a protection of our physical records and assets from loss by theft or damage. And we're going to have one centralized location where the account files are placed. As I stated, I'm the overseer of the filing system. And lastly, the technical security. This is the protection of electronic records from loss, theft, damage, or loss in transport. So as I mentioned before, this is coupled with your physical security. Before I'm going to engage with the IT department and ensure that we stay on top of this, because as you know, we've some of us have encountered accounts being hacked, our bank accounts being hacked on a personal level. So we have to make sure that this security is a beyond approach. All right. Continuing on to our key terms and concepts overall, throughout the class, one that stuck out the most is what the gap, general accepted accounting practices. And it's strange that we have these practices for accounting in certain realms or certain aspects of companies and businesses, but in Hollywood it kind of goes unchecked. It's almost like the wild wild west, because it's so fluid, it's so pliable, and they can change it so much. But continuing on, but learning them about the balance sheet in week two was great, because it showed me, okay, you have to balance everything out. This has to go to accounts payable, and this should be credited versus debited, and things of that nature. And which is a a great tool to know. It's a great tool to know, and I'm gonna make sure that I stay on that for you guys. As far as the profit and loss statement, it's interchangeable with the income statement or the statement of operations. And I didn't list that here, but it's just something that I wanted to highlight as well. Um, and then you go into the master budget. You have the sales budget. You have the inventory purchase, and the cost of goods sold budget goes within to the master budget. So these are all important things that I learned in week three. And continuing on, we going in quick. I gotta highlight QuickBooks. QuickBooks is an amazing tool. You actually don't have to hit save. As soon as you input that information, it is saved automatically. And this is a great tool for us as a company and organization to use. And I'm going to continue to use this, and it's been used by some of the bigger businesses. So we need to make sure that we're on par with them. All right, as far as week four, we got the standard auditor's report, financial statement analysis. We do trend analysis and the ability to pay current liabilities. Um, it is a lot of key terms and a lot of concepts that accounting has taught me, and I know this will help this organization be great, and I know this will help me be a great accountant for you guys, and I hope that and the continued success of the company, and I hope my continued success for the company, so that we can continue to grow and we can continue to be one of the premier event coordinators and organizations out here. Um, at any rate, again, I'm Paul Reynolds. I appreciate your time, and thank you, and have a great day.